And good day. This is the Eye of the Storm podcast with the weekly update for the S&P 500 being recorded on Saturday, July 13th, 2024. I'm going to start on the SPX and I'm going to start with the weekly 3-year chart. And I'm going to do a quick review of starting with the primary degree on down, where the count is for me right now. And on a primary degree, we, since October of 2022, are now being involved in putting in a primary fifth wave. That primary fifth wave will consist of 5 waves of intermediate degree, of which we are and remain within the intermediate third, an intermediate third wave of a primary fifth wave. Within that intermediate third wave, we also remain in progress of completing, if not just completing, a minor third wave at the current highs. Now, so that is the large countdown to the minor degree down to where we are currently. And I want to present tonight the alternate view, which allows for a continued ride up. And a little bit of background here. On an Elliott basis, I know it continues to extend higher. But what's really changing, of course, is what's driving the market. And it isn't necessarily that we're getting a large group going like, okay, we're bullish, we're this, we're that, we think everything is wonderful, although it does talk that side up. But it really breaks down to a quantitative type of a move that's been in force and continues as long as the numbers support it. And that means the levels. So there's certain levels that above or below produce more of a safety zone for the upside to a safety zone for the downside, or a little bit more if you're talking about going down. Everyone wants to throw that into a negative. So, but I just prefer to keep it quantitative. And if we do, then we have volatility triggers. We have on an options basis, we have put walls and call walls. And when they shift, the market is shifting a great deal of capital along with it. And so it's that capital movement that gives us the trades that we want to see. It gives us the movement that we want to see, whether it's up or down. So what I'm referring to with a volatility trigger and an area where the market is green light. So it's okay to go up because everything should be supportive quantitatively. In other words, the actions that are going to be taking place is that more than likely they're going to be selling volatility, but then they're going to turn that money and they're going to put it back in via volatility in the underlying. And what that creates is that they're buying calls. So and selling puts basically. So they're picking up to the upside. Now, and primarily that continues until you start to get a crack or a move back down towards that volatility trigger. And then if it actually gets triggered, it could shift it to a risk off or type of situation where there's a lot of covering. If we're coming from a period where being long was the ticket, and to then changing that and then it's being short is the ticket because the market intends or shows that it's going to move lower. Now, on an Elliott basis, that is, of course, we're looking for the completion point for that minor third wave, which I still am leaning as in my preferred count that is in. But it was more based on the futures market with that still being possible here. But after Friday's trade, and when I was reviewing the cash markets, I realized it's like, I need to put the alternate out there, which would suggest that we still have one more little leg up. But these little legs get accelerated primarily because it's never been here before. It's thin. Why would you sell unless you've got a reason to hedge something? So to be getting short in a market that's basically when it decides to go directional, which is up, it goes. And the market could be up 100 or 144, or in the SPX, it could be up 50 or 60 as quickly as it can be down 50 or 60. So we're in an area where being conclusive of like the market deserves to be here and can be supported to be here, it fluctuates quantitatively. So I tend to kind of stick with that view for intraday trading, for day trading. That to me provides the moves that I want to see. But here is the deal. You kind of have to stay open that is what's going to happen and not get stuck on bullish or bearish. And so therefore the division between being a day trader, being a swing trader, being a position trader, or trading macro, where if you're a macro trader, you're putting it on a position, you're going to leave it on. So there's a lot of differences here. But right now, I'm really looking at things quantitatively and what the computers are doing, what the algorithms are doing, and for trading the future. Now, with that in mind, my preferred count remains that we've completed minor wave 3 here, but and that would be clearer on the futures market than on this. So let me just bring it down. So again, we're finishing up minor wave 3, which will be 5 waves of minute degree 1, 2, 3, 4. We're still in minute 5. So starting from the bottom, within that minute 5th wave, we're in minuet wave 5. And within that minuet wave 5, I believe we are now, if possible, via the alternate count, we are in sub-minuet wave 5, of minuet 5, of minute 5, of minor 3. So you can see how I walk back down the ladder. All right, I have intermediate 3, minor 3, then minuet 5, then, minute 5, minuet 5, and then sub-minuet 5. So I walked up the ladder, I can walk down the ladder. And you can see that quantitatively, the market has been walking up the ladder. But if I'm counting it out correctly, and I try to be accurate, then I believe we're reaching that pinnacle or have reached that pinnacle. Now, I'm going to bring it down off of the weekly, and let's bring it down to the daily so that we can see inside here to see how I've labeled it. And here, it is more clear than it was in the NASDAQ, because the NASDAQ get a little hiccup right up in this area. But in the S&P, it does show us 1, 2, 3, 4. Now, same deal. There's wave 2, there's wave 3, here's wave 4. That orange box represents the area wherever this minor 4th wave would finish. My outlook is that this is where minor 4 will come back into. And that level remains 52.65 on the top. And on the bottom, we have 49.53. And so it's a decent zone, but the minor 4th wave would be expected to find its terminus, its endpoint, within the price territory of the minute 4th wave, the 4th wave of 1 lesser degree. So down from minor is minute. So again, that all kind of lines up, and I'm leaving it right there. Now coming back up, I want to now bring it down, and we'll take a look inside there. And I'm just going to come down to the 4-hour chart because it kind of gets detailed. So we have 1, 2, and then it subdivides 3, 4. And I want to bring this down to the hourly so that we can go in and we can see the 3 and the 4. Now, granted, this kind of came up. I could move that 3 over to here, but I'm actually going to leave it here, and that's going to come as a little bit of an irregular, comes back down, puts a new low in, and that worked. So then I have 1, 2, 3, 4. Before, there was 3, 4, and then 5. And then we did this, though. So what did that present? A little bit different. We came up 1, 2, put the 3 here, the 4 here. That 5 still can go there. See, 1, 2, 3, 4, 5. It really can. But on an alternate, if they continue to do the trade like they're doing, which is they walk back in and they're selling the VIX and they are buying the underlying volatility, which means they'll show up and continue to buy Apple, they'll continue to buy Microsoft, they'll continue to buy AMD, all across the board. They will buy what they have been buying, and the market will again rise. If that's the case, then I'd be looking at this as 1 of 5. So we go down another degree. 1 of 5, 2 of 5, and we're looking for it to go again to the upside. Should it do that, basis the cash, we'd be in sub-minuet wave 5. And how high can it get? Well, if I'm just doing it from this level, the next fib resistance is 2.618, and that's 56.61. But if this is 1 of 5, well, you're going to be looking for a whole lot more. And to continue that, you can see that 3.618 is 56.94, 4.236, because the numbers using the larger levels is 57.14, and then we have the minuet wave 5, 1.618 comes at 57.21. So if I had to put it together, this would be probably gain a little bit more weight, but then because that allows for 3, 4, 5. Now, or this is the other side. It came close to 2.618, and I can count 5. So if I put the 5 there, the sub-minuet 5 there, the minuet 5, the minute fifth wave, and then the minor third wave, then we will continue to go down. So I'm presenting the opposite on this. And I didn't go into such great detail with the NASDAQ. And so if you're watching both, it's the same deal. If the 5 remains in place, then we're looking for this to kind of come sliding down and break below wave 1. But here, it can be done and just start to drop because I can count 5. And we would get confirmation, of course, because if we put the 3 there and we're going to do the 4, which doesn't fit either, that part doesn't work for me. So I'm leaving the 3 there and the 4 there and the 5 there, or it's 1 of 5. Outside of all this, we should have additional, but I didn't stick them up there. 57.51 would be a minute lever fifth wave. So again, these are plausible. And if this is 1 of 5, then they're just going to continue the current trade. And it's quantitative. And these are models that are plugged in, and the objective is that you're basically getting long because you're expecting this, again, spike higher. And why would it spike higher? Because it's no man's land, as I call it. The markets have never been this high. So that these prices have to be supported. So we have analysts that are out there saying, oh yeah, well, they're expected to make this much, that much, just using models that may work or may not work. So, and we are beginning to move into earnings season now. And so keeping that type of a trade going, because we would expect explosive moves from the larger corporations continuing to just blow the doors off or talk up their earnings that, the future looks extremely good. Whatever the situation may be, these are algorithms and they're just going to react. So we have potential where we just keep going. I don't believe that that's going to last forever. I don't think there's anybody that does. And usually from those that do, well, they get burned. We had the same type of a talk start. Markets cannot go down. We had it in 2000 with the NASDAQ. Market can't go down. You got to be long the market. Just prior to the great financial collapse, the economic collapse of 2008, 2009, there was no expectation that the mortgages were just going to go belly up. There was none. So when it came, the market was hit pretty hard and it went down very fast. Now, here we are again. It's all based on artificial intelligence, and artificial intelligence is actually in force right now. That's what these, quantitative, they're models. And so when the trade appears and it works, it gets executed. So when that changes, there's going to have to be something economically or something that will have to come in and actually force it. And so right now, it's in the zone where going up is all green. And if it breaks below the volatility trigger, then it is going to turn negative. Because all of the quantitative, that all now goes into a defensive mode. And so there's a lot of adjusting, and the computer and the models do it for them. In any case, back to the count. So 3, if it's 1 of 5, this is what the alternate would suggest. 1 of 5, then we're still going to go up. And the possibility of clearing 5,700 in the cash market is real. If it continues to go up, it would be building on this. And this would be 1 of 5, 2 of 5, 3 of 5, 4 of 5, 5 of 5. So we truly have the ability to get up into this up mid 5,700 zone on the cash. I'm not saying that that's what's going to happen. My preferred continues to suggest that this is 1, 2, 3, 4, 5, and everything builds from here and we start to go down. Again, if we start to break below the 200 and then break below the fourth wave, which is still just 55.74 is that bottom of that fourth wave, actually 55.76. And so if we break that, plus have already broken the 50, moving hourly 50, I would expect that we might get some increased downside. And then we're heading towards there, because you can see the rally does not leave us many points to find support that the market can bounce off of. So we see it there, then we see it there, and a break there puts us in a much different position, because we're going to be likely breaking the call wall and breaking the volatility trigger. And if we do that, that's not the one I wanted. Then I'm looking for it. See, then you just move up. And if I go to the daily 20 is at 55.08. So if that breaks on the daily chart, it produces a more negative. Now we start to drop because things need to be adjusted. Then again, 53.72 is the daily 50. 55,033 is the daily 200. So basically, you can almost say if we break 5,300 or 5,400, it can be a very quick trip down to 5,000 because of the way it rallied. So we have points, but they would not be expected to truly hold until you got down here. But then you're into that zone. So again, how do we get down there? It could happen very fast. It really can. And just be a big like this, boom. And it might be into August expiration. It could be into September expiration. I'm not sure. But it should, I believe, start to move down. Now, bringing it all, let me take it back to that hourly chart. Yeah, so 1, 2, 3, 4, 5, and then see if it comes down. The break point really that's going to give it a lot of weight and may show some acceleration in the selling, as should it occur, would be 55.86, where the 200, excuse me, where the 50 is. Let's go over and take a look at the S&P. See much larger type of a move, but here we came up and we improved the high by $1. Woohoo! So new high is new high. But even if I break this down, that's the hourly chart. I'm going to go backwards here for a second, but I'd have to come in here and go 1, 2, 3, 4, 5. Oh, okay. So either that's a 5 or it's 1 of 5, same as the cash. But then we get this nice, very steep sell-off at the end of the day. Just like right out. But again, there's a lot of stuff being released. Expiration is within as at hand. So if it continues to go down, there's the level we're looking for it to break, to move to new high below 56.21. And I believe I read where the call wall flipped from 57 back to 56. I'm not sure, but I think I did. In any case, that's going to be support. And if it breaks, then it should be a quick ride again. Let me bring it out of there. Go up to the, if it starts to break down, I would expect it to just really kind of go. Because we have, it just, because of the way the market flipped and went higher, it can flip and go south. We saw it here. We saw it here. So if we come in on Monday and it begins again, or even tomorrow, and they begin to continue to sell it, it could drop pretty quick. Now, we might get varied reactions and it can go up. When you have a market that's moving large in one direction or the other, all of the bounces in between, or even the reversals, it can be pretty strong. So we've got to go on levels. Now, these are all geared for upside. And so right now, if we are finishing, if this is just 1 of 5, 2 of 5, then we basically need to go up in the third. And what am I looking for in the third? For it to go. Now, in this style of trading, in this current environment for trading, yes, if it starts to go up, they could just step in and buy it and it'll go. It will just go. We've seen it. We saw it here. We saw it many places on the way up. So that's the strength of either side that has to kind of show up at these levels. Okay, so turning higher, 57.14 resistance. And again, 1 of 5, you're going to be looking for much more. So 1.618 is 57.71. So now we're moving 58.65, 2.618, where this fifth wave would be 2.618 of the first wave, all the way down there, at 58.65. Can that happen? Yeah, it can. Because look at this you see this is dark for a reason, right? So, because there's never been here. So when it will be thin, there'll be one lots at all these levels. Why? Because who's ever going to come in and buy it usually is wanting 10 or 20 or 30 or 40 or 100. And that just moves the market because there's very rarely going to find. And if they do, and you see it on an instrument such as Bookmap will show you where there are resting orders. So there will be orders all the way up there, but they become magnets for the other algorithms that are building towards a particular direction. Up or down, if there's large enough orders, algorithms will start to target there and trade it all the way down or trade it all the way up. So there you have it. Now, for minuet wave 5, we have 1.618 at 57.63. So see this cluster? It's not bad. There's the minute. The minute comes in at 57, I'm going to say 60, so 57.59. And then we have 57.63 to 57.71 or 72. So we basically have 58 to 72 is a zone that the market can get to. But again, 1, 2, 3, 4, 5, is it 5 or is it 1? If it's 5, then not expecting it. If it's just 1 of 5, I'm expecting it to go through this. So from here to there and down and then back up again. So we may get through it, get up to it, pull back, and then go up and finish. 1, 2, 3, 4, 5. On the minuet, we have 59.24. I'm not necessarily looking for that on this turn. I am looking for it this year, but we need to get through this minor 3 down to a minor 4 and then back up in a minor 5th. Yeah, then I'm kind of thinking that this is where we could end up. 6,000. But I'm thinking that will be in either minor 5 or intermediate wave 5. Don't forget, we come down in a minor 4, we go back up in a minor 5th, that completes the intermediate 3rd. We come down in intermediate 4, go back up in an intermediate wave 5. So we're going to bounce back up and down more than I think people are actually. Well, I think they are, because you look at it, there's a lot of talk of this all going through the end of the year. So I'm going to look at moving averages, and then I'm going to go because I'm seeing I have a delayed data, and that might mean that my internet connection is gone too. Nope, it's still there. Good. So I'm still recording, I hope. Let me break this down. Let's look at the daily chart first, and we're just going to take a look at, it's not going to pull it up. Oh, dang it. All right, well, I'm just going to have to end it there, folks. I don't want to stay here and wait for why my system's not picking up anything. So the next Elliott Wave update will be on Monday, July the 14th. Excuse me, July the 15th.